Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Today's video is a quick one aimed at Tesla investors, shareholders, fanboys, fangirls, shorts, and curious observers. If you own Tesla stock, stick around. I'll post an in-depth Q2 earnings preview in a week or so when we have delivery numbers, but I thought it was important to get this out before then. Elon Musk has dropped a few hints recently which I'll explore too. As I said a few months ago, Tesla's Q2 deliveries will tell us everything. I mean everything we need to know. Most importantly, we'll see how Tesla vehicle sales hold up against the wider market. Q2 2020 is Tesla's most important quarter ever. My expectations remain unchanged from 3 months ago. Tesla will gain market share relative to other automakers. While total deliveries will inevitably be down, this is unavoidable given the Fremont factory was shut down for a large part of the quarter. We must look at the numbers in context. In this video, I'll provide that context and what it may mean for Tesla's stock price. And speaking of stocks, dude, I am so smooth. WeBull have a great offer for US residents. You can get up to 2 free stocks and help out the channel using the link in the description. And those in the UK, Australia or New Zealand can score a free stock with stake, also linked below. I'm not the only one who likes free stuff, right? Let's get back to it. Demand. Tesla has, up until now, been permanently production constrained. That is, they have never been able to make enough vehicles to meet demand. Their order backlog continues to grow quarter over quarter. Tesla has stated this fact in consecutive quarterly earnings. It's not wishful thinking, it's fact. This matters, and yet somehow, just about every Tesla bear on the planet hasn't been able to muster up the intellectual capacity to deduce this. Tesla sells every vehicle it makes, has done for over a decade, and yet still we hear that there are concerns about demand. No, there's no concerns about demand, just about the reasoning faculties of some Tesla bears. Let me be clear, we do not know how much underlying demand there is for Tesla's vehicles. Tesla could have demand for 5% more vehicles than it can produce, or 50%, or 500%. We simply do not know because any demand beyond that which Tesla can meet remains a mystery. They simply tell us, we have a record order backlog. But the global mayhem of early 2020 has given Tesla investors an incredible opportunity to gain insight and clarity around underlying demand. There is no doubt some people who intended on buying a Tesla in 2020 will have changed their mind. Some will have cancelled orders so they could buy more toilet paper. Many others who have lost income or had a business murdered in cold blood by lockdown orders will no longer think it's sensible to drop 40k or more on a new vehicle, no doubt. But let's think our way through this. Relative demand and market share. In Q1 2020, Tesla produced just over 100,000 vehicles and delivered almost 90,000 of them. Great. For those wondering, the leftover vehicles were not unsold, they were undelivered. Big difference. Believe it or not, shipping a vehicle from Fremont, California to, say, Perth, Australia takes time. It's also logistically insane to send tiny batches of vehicles on a boat when you can ship them in bulk. Economies of scale matter, so there will almost always be vehicle inventory going into a new quarter. However, Q2 is a special chance to discover more about underlying demand. Say Tesla produces 80,000 vehicles and delivers 50,000. This would imply that Tesla production exceeded demand in Q2. This is entirely possible. And if so, it's not time to panic sell your shares. It's time to look at the delivery numbers of other automakers and think. If Tesla deliveries are down 50%, but Ford deliveries are down 75%, GM are down 80%, and VW are down 70%, we will know Tesla is gaining market share. This matters. So much so, in fact, that I'm going to ask you to pause this video for a moment and let that sink in. This is one of the most important Tesla data points we'll ever see. This is a type of insight we simply would not have gained were it not for the global shit show earlier this year. But it gets even better. What if Tesla delivers every vehicle it makes? Now, I don't literally mean every vehicle. As I said, for logistical reasons, there will always be vehicle inventory. But if Tesla sells most of its production, a comparable percentage to prior quarters, holy f***ing shit. If we discover Ford and GM deliveries are down, say, 50%, and Tesla deliveries are basically flat, we've just learned that demand for Teslas is astronomical. If automotive sales are down about 50% in the quarter, yet Tesla sales are flat, there's 2 likely reasons. 1. Half the people who wanted to buy a vehicle of any kind decided not to buy a vehicle in Q2, but Tesla had twice as much demand as they could meet anyway, so even with half the demand, Tesla is still production constrained. This would be amazing. Or half the people who wanted to buy a vehicle of any kind either decided not to or decided to buy a Tesla instead. In either case, if Tesla deliveries see less of a percentage decline than other automakers, we have discovered that relative demand for Tesla is far more than imagined. Once again, this will be one of the most important data points we ever get on Tesla. Elon's hints. Time for some speculation. Now, this is going out on a limb. I admit, I could be totally wrong here, but stick with me. I think Elon Musk is smarter than most realize, including how he communicates information. On January 28th, a day before Tesla released its Q4 earnings, Musk tweeted, "Shares are underappreciated." Some wondered, how high is Elon? Others, like myself, instead of dismissing the tweet as ambient-induced madness, noticed that phonetically, it sounds like shares are underappreciated. If you don't have a dictionary handy, let me define underappreciated for you. Fail to value sufficiently highly. Tesla stock was in the mid-500s at the time of Elon's tweet. A week later, following the outstanding Q4 results, it was almost $900. The stock went vertical as a direct result of Q4 earnings. Maybe a coincidence, but in my opinion, the tweet was Elon's way of simultaneously telling the SEC to go fuck themselves and offering a hint to cluey investors. And in my opinion, Elon will keep dropping these hints in the future. Leaked emails. Once again, pure speculation, but let's be real. Elon knows every email he sends internally to everyone at Tesla can and will find its way into the press, if it's saucy enough. What a great way to once again tell the SEC to go fuck themselves.
I want to be clear, I do not respect the SEC. I do not respect them.
Tweeting material information is a no-no, but I mean, if Elon sends an email and some terrible person inside Tesla just happens to leak it to the press like every time, well, not Elon's fault. Musk is no fool. He's acutely aware and is clever in his choice of words. Let's look at the latest leaked email from this week. For many reasons, a great deal of Tesla's execution worldwide is packed into the final week of the quarter. It is very important that we go all out through end of June 30 to ensure a good outcome. Wouldn't bring this up if not very important. To ensure a good outcome. Very understated. But the final sentence, wouldn't bring this up if not very important, really suggests it is very important. I wonder what a good outcome might be. Better than expected deliveries? No doubt. A smaller than expected loss? Maybe. A miraculous profit and S&P 500 inclusion? Now we're talking. I'll go on the record. I do not expect Tesla to show a Q2 profit, but I would not put it past them. The big variables beside deliveries are ZEV credits and recognition of incremental full self-driving revenue, which could each be 9-figure amounts. Musk will know better than anyone how likely a profit is. Here comes the big call. If Tesla pulls off a miracle Q2 profit, it's game over. To harbour any doubt about Tesla's long-term viability after that would be tantamount to advertising a malfunctioning mind. I don't say this to be rude. I say this to make my point clearly. If Tesla posts a Q2 profit despite factory shutdowns, global panic, logistical challenges, supplier issues, and massively reduced consumer spending, this tells us everything we need to know about their future. The final hint. One more time, I speculate, but stick with me. This week, Elon Musk changed his Twitter profile picture. Nothing out of the ordinary there, except that the new photo happens to show a roaring hellstorm of flames blasting from the Raptor engines of a Falcon Heavy rocket. Could this be another hint that Tesla shorts are about to get burned? Something to think about. S&P 500 inclusion. If you don't know the significance of the S&P 500 index, here's the watered down version. It's basically the top 500 companies in the US by market capitalization. Cool story, bro. What's the point? Well, there are certain other criteria needed for inclusion. Not only market cap, but time in business, profitability, etc. So far, Tesla has remained ineligible, but should they post a profit of $1 or more in Q2 2020, they immediately qualify for inclusion. And why does this matter? Overnight, literally, hundreds of funds who buy and match the S&P 500 index will have to buy Tesla stock. Lots of it. This will put intense upward pressure on the stock price. S&P 500 inclusion is a huge growth catalyst for Tesla stock in the near term. Again, I don't expect Tesla to post a profit, but if they do, I would be astonished if Tesla stock doesn't react very positively. Delivery rumors. Rumors have recently surfaced suggesting Tesla may exceed 85,000 or even 90,000 deliveries for the quarter. Should this turn out to be true, a profit is likely, meaning S&P 500 inclusion is likely, but more importantly, as I said earlier, we will gain hugely important insight into the future of Tesla. If Tesla's quarter is as bad as everyone else, we learn nothing new. It's not good or bad, it's neutral. But if they gain relative market share and or turn a profit, it's game over. Don't say I didn't warn you. Where have all the bears gone? And finally, before we wrap up, I'd just like to ask the question, where have all the Tesla bears gone? A few months ago, they were everywhere. Tesla will never make a profit. Elon Musk is a fraud. The competition is... Sorry, I can't even say that without laughing. The competition is coming. There's no demand. Tesla is a zero. Unfortunately, a typical C and BS viewer takes this as fact without doing much, if any, homework. And these appearances can artificially suppress the stock price, cause retail investors to sell, and most importantly, create buying opportunities for smart investors. Today, the bears all seem to be in hibernation. I don't blame them. Tesla has been hitting home run after home run. Should Tesla blow everyone away in Q2, I find it hard to imagine a single bear will be willing to crawl out of their den in shame and face the finance media with a straight face and continue to spout the same bearish drivel. Except, of course, if they have a shitty book to promote or a consulting service to sell. If Tesla achieves S&P 500 inclusion and the bears all but disappear from the mainstream finance media, this may catalyze a widespread and long-term shift in sentiment from Tesla is doomed to Tesla might succeed, which is kind of where most people are at now, to Tesla has won. Sometimes, what is obvious to you or I may take longer to reveal itself to others. Tesla's Q2 2020 is about those others. We will learn so much about the future of Tesla by discovering how much demand has fallen, if at all, relative to other automakers. I don't say this to be insensitive, but the health drama that swept the world in 2020 has given Tesla stock investors their single most important insight ever into the future of the company. All eyes are on Q2. Will Tesla deliver the goods? Time will tell. And don't forget your free stocks with WeBull and Stake. Links in description. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. How many vehicles will Tesla produce and deliver in Q2 2020? Will they post a profit or a loss? How much? Will the bears ever be seen again if Tesla posts a profit and achieves S&P 500 inclusion? And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like to access exclusive videos, regular Q&As, behind the scenes content and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description, and you can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. Either way, the best form of support is you being here and watching, so thanks again.
I do not respect the SEC. I do not respect them.